So let's talk about the Indian economy, because 2026 is shaping up to be a really, really pivotal year. After a period of some serious headwinds, the whole story is starting to shift. Today, we're going to dive into the evidence that suggests a major economic transformation isn't just possible, it might already be happening. And that really brings us to the central question, right? For anyone watching India, this is what it all comes down to. Is this a genuine turning point? Are we really on the edge of a whole new growth path as we head into the new year?
Well, based on the data that's coming out, the answer looks like a pretty firm yes. We're seeing some really compelling evidence of a recovery across a whole bunch of sectors, which suggests the foundations for a powerful rebound are now in place. So, okay, let's get into the specifics.
To really appreciate this shift, it helps to remember the context. Not that long ago, the economic conversation was all about high costs for businesses, stubborn inflation, and rising interest rates that basically put the brakes on demand. That was the landscape.
But that story is changing, and fast. In 2026, we're seeing two huge parallel engines of growth starting to accelerate. We're going to start with the first one, the powerful comeback of India's industrial core.
Yeah, this is about those foundational sectors, the industries that build, move, and power the country. After being pretty quiet for a while, these core economic pillars are now showing a remarkable recovery.
And here's a perfect sign of that revival. Domestic commercial vehicle dispatches, we're talking trucks and buses, they saw a massive 26% year-on-year increase. Now, this isn't just a small uptick. It's a direct signal that more goods are moving and more construction is happening. It points to a much broader economic revival.
So what's fueling all this? It's really a mix of several key things happening at once. You've got supportive policies like the GST 2.0 reforms, which are helping to simplify the tax system. That's happening alongside a huge government investment in infrastructure, better conditions in rural areas, and, this is crucial, a strong rebound in construction and mining that's driving real, sustained demand.
And it's not just us saying it, industry leaders are backing up this positive outlook. Girish Wagh of Tata Motors says he expects this momentum to stick around. He's pointing to that continued infrastructure spending as a key growth driver through 2026, which suggests this is a long-term recovery, not just some short-term blip.
So, okay, the traditional sectors are coming back. But the second, and you could argue more transformative, engine of growth is coming from the tech-driven industries. These new titans are getting ready to completely reshape the economic landscape.
And the strategy at Reliance Industries is a perfect example of this whole shift. The company has laid out this incredibly ambitious plan that includes a new AI subsidiary, a massive investment in new energy, a move into robotics, and of course, the much-awaited Jio IPO. This is a huge strategic pivot toward the industries of the future.
Now, what's really wild here is just the sheer scale of Reliance's green energy plans. They've already launched dozens of biogas plants and plan to scale up to over 500. They've set up the world's largest bioenergy research center, and they're going after large-scale green hydrogen production. This is basically a blueprint for an industrial-scale energy revolution.
And the financial goal behind all this? To more than double the company's EBITDA by 2027. Now, EBITDA is just a core measure of a company's operating profit. So this isn't just about pursuing cool new innovations, it's a hard-nosed financial strategy. It's built on the belief that these new sectors are going to be the main drivers of future growth, and they will attract a ton of capital.
And Reliance's big investment in AI is really part of a much larger trend. It's reflecting a wave that's sweeping across the entire Indian IT industry. After a bit of a slowdown, the sector seems positioned for a major recovery, and it's being fueled largely by the insane global demand for artificial intelligence services. So, we've got these two immense forces at play, the industrial comeback and the tech revolution. But what does all this high-level strategy actually mean for us in our daily lives? Let's zoom in on what this all means for consumers and investors.
The telecom sector is a perfect case study of this competitive landscape. You can see Bharti Airtel is currently in the lead with a higher ARPU, or average revenue per user. They're focused on pushing that number up. But on the other side, you've got Reliance Jio playing a volume game, just constantly adding more subscribers. It's a fascinating look at two very different strategies to capture the market.
And this right here shows you the massive stakes they're playing for. The Indian consumer market is valued at $2 trillion, and it's made up of 350 million middle-class households. That is, without a doubt, one of the biggest growth opportunities for any company in any sector anywhere in the world.
Now, from an investor's point of view, some analysts are highlighting potential opportunities in precious metals. According to one market analysis we looked at, the outlook for both gold and silver seems pretty bullish, with this data suggesting there could be some price increases in 2026.
But it is super important to note that this information is taken directly from our source material and is absolutely not financial advice. We always recommend you do your own independent research.
And this brings us full circle. With India's traditional industrial engines roaring back to life and its new technology sectors igniting with investment and ambition, well, the pieces are clearly in place. The question isn't really if the economy will expand anymore, but whether 2026 will be the year that it all comes together, the year it breaks out onto a totally new path. And that's the critical question for all of us to consider.